Mortgage rates are falling as recession fears outweigh inflationary impacts of Trump's tariffs. What does this mean for Kiwi homeowners and their mortgages? We break it all down for you in this episode.
We're back in your life. Trump's tariffs have created chaos. The question is, how does it impact house prices and your mortgage? Now, Michael, we have recently done an episode talking about the investment markets. You can find that in the show notes below. But when it comes to house prices, how do tariffs, Trump, the chaos that is getting created, all of this uncertainty, first impact house prices?
Yeah, cool. So they're not directly going to impact the house prices. It'll be the secondary effects of the tariffs and the slowdown in the global economy that's really going to affect house prices. And that's going to be off the back of a couple of things. So my prediction, I was actually calling at the start of the year, I think I said we were going to see 10% house price growth. Boy, was I wrong. I don't think we're going to get anywhere near that now. And that's because the sentiment at the start of the year was really positive, right? Like everyone was like, yep, the sun's come out. We're feeling good. We're going to sell some houses, then buy some houses, and everything's going to return to normal. I don't think that's the case anymore. I think we're in for a bit more uncertainty.
So what are you forecasting for house price growth?
Flat.
Yeah, come on, give me like 2 or 3.
Flat.
And why do you think flat?
Cool. In New Zealand specifically, because we've got a lot of stock on the markets. We are seeing transaction volume increase, but there's just so much stock out there that the prices aren't going anywhere. But sellers are now meeting the market. Whereas previously they weren't meeting the market, they were hanging out for higher prices. So that's the first reason I think that we're not going to see much house price growth. The second reason I don't think we're going to see a lot of house price growth, usually as interest rates come down, house prices go up. I think because of the global uncertainty, credit markets are going to dry up a little bit and cash isn't going to be as easy to get. So I don't think you're going to get more kind of oil in the machine that's going to get everything running quickly again.
What does credit markets drying up mean?
Cool. It generally just means there's less credit available out there to dish out as home loans. So I just don't think there's going to be that much money flowing around.
I guess it also depends how desperate the Reserve Bank is to try and stimulate the economy.
Well, they'll just keep doing whatever they have to do to fix it. And I hear some people out there saying, and I echo Jared Kerr's sentiment on this. I hear a lot of people out there going, this could mean the impact of global tariffs could mean that the official cash rate is going to go up because of inflation. And some of you voted that on our poll on Instagram the other day. And I'll tell you what, I couldn't understand why. Yep, don't get me wrong. In the short term, you're going to get some imported inflation maybe, but in the long term, the slowdown in global growth is going to impact the economy more negatively. I think that presents a downside risk to the official cash rate, and we could see it going much lower into stimulatory kind of waters.
Is it possible we end up with those COVID, 2% interest rates?
I don't think it's going to get to 2%. I don't think that the tariffs will slow down the global economy that much. I don't think he would be willing to go there in terms of his tariffs. I'm talking about Trump. But I do think they're going to go lower, so you'll see some stimulatory interest rates.
One thing I'm seeing at the moment is just around just the amount of supply of housing. Is that a big... surely that's going to slow everything down as well, opposed to just interest rates dropping.
I don't think it's going to slow everything down. I just think that that's going to cause a drag on house price increases. Because the longer that those houses sit on the market, it's never a no, it's a no at this price, right?
Yeah.
So they will drop the price until they're sold. And vendors are willing to meet the market now. So I don't think it's going to be a drag in any way. I just think that it's going to stop the increase of house prices taking off again.
One thing that Trump's tariffs definitely impact is business confidence.
Yeah.
That then makes companies go, do we need to look at redundancies? Do we need to look at restructures? What's going to happen to the unemployment rate? Michael, what do you think is going to happen to the unemployment rate?
I don't think it'll move significantly.
Okay.
I feel like the country and businesses have been through enough restructuring and kind of laying off people over the last 2 years that the balance sheet could be a bit better, but from a cost and efficiency perspective, they're probably poised quite well for this.
So, Michael, I'm keen to hear, you've talked about house prices, but the question is, how does this affect your mortgage, your interest rates? And we're going to hear what Mike has to say after this break.
Do you have a mortgage, or are you looking to get on the property ladder, and all of this tariffs, recession, uncertainty is making you feel a little nervous about the situation? Well, get in touch with Lighthouse Mortgages. We have a team of expert mortgage brokers who can help you navigate the waters of refixing, restructuring, or purchasing a new property. Click the link in the notes below to get in touch. Now, back to the show.
So, Michael, you've talked about house prices that, depressingly enough, you don't think they will go anywhere.
No.
What about when it comes to our mortgage? What is the impact of Trump and tariffs on interest rates?
Cool. Well, we actually already see it priced into the market. So we are one of probably the only economies in the world, I think it's 4 of them, where the Reserve Bank actually forecasts what they're going to do. It was tracked to go down to 3%. The market is now pricing in 2.65. Right, so that means they're pricing in another 25% basis point drop, and they're also taking a punt with 15 basis points that it's going to drop further.
So that's the OCR. How about interest rates?
Yeah, cool. So I think there is a real downside risk that interest rates are going to go lower than we originally anticipated. At the moment, our best rate in the market for 1 year is 4.99. That's the lowest we got. I think your 1 year interest rate over the next 12 months could go sub 4.
Sub 4, Michael, that's a bit spicy. How confident are you that's actually going to happen?
Yeah, I mean, I actually am pretty confident. I genuinely think if these tariffs hang around for much longer than a month or two, that presents real uncertainty to the markets. And I think that reserve banks will basically just keep throwing water on the fire until we get growth. And I don't think it's as bad as when basically... And I don't think it's going to be as kind of stimulatory as when we had COVID, because I think everyone learned some lessons there, right? Initial response was fine, but it dragged on for way too long. But I do think, a 3.99 interest rate, a 3.95 interest rate, that's a great interest rate for 1 year. But I genuinely don't think that's, a crazy interest rate.
Very true. So, I mean, if we think about first home buyers and investment property owners, first home buyers, their mortgage repayments will become getting cheaper over time, making the house more affordable. Property investors, the numbers are going to stack up better. Yeah,
absolutely. But again, I think it's probably a really key time to be talking to a mortgage broker about what you should be doing with the mortgage. More so than ever, right? We had customers a year ago, 2 years ago, who are fixing for 5 years. And I look at those, I think about those customers now and I go, bloody hell, they're going to be looking around going, crap, what have I done here, right? And sometimes that's the advice that the bank gives you. So I would say speak to a mortgage broker about what you should be doing.
So the great thing, Mike, about giving advice on the internet is it is there forever. About a month ago, you were saying, I've gone from 6-month fixes to 1 year fixes. With this news, do you still stand at 1 year, or are you kind of going back to 6 months?
That's really just case by case at the moment. I genuinely am I think post official cash rate announcement, because we're recording this before the official cash rate announcement, I've basically held off most of my advice. I've told everyone to just wait and we'll just see what happens. But I think post OCR, I have a much clearer idea of that. But again, this is all case by case for people. This isn't personalized advice. Just because I'm giving my opinion on where I think rates were going, that doesn't mean that you should make a move off the back of it. What you should do is go speak to a mortgage broker. It doesn't have to be me, but please, I think now more than ever, go get a sounding board and get someone to bounce your ideas off.
I do think when I talk to clients, it's quite easy to see the ones that have just done their own thing and fixed with the bank or whatever. So just to reiterate, Mike, we don't think house prices are going to go up, but we don't really think they're going to go down. Interest rates are going to go down, which is what we think, which means that money will be cheaper, which means repayments will be better. For investment property, the numbers are going to stack up better. Sounds like a pretty good time to buy.
Yeah, it does. But when you frame it like that, what am I talking about? If you were to sum it up in one word, that's a recession. You've got interest rates going down, house prices aren't increasing, there's economic uncertainty around, and credit markets dry up. What I'm saying is there's a real risk the economy goes back into recession.
And depending on when you watch this episode, how far into the future, hopefully the answer is Trump was just negotiating. None of these things actually happened. Fingers crossed.
And that's what I think is going on. But if he's not and he's serious, there's a real chance we go back into recession.
Awesome. Well, that is the breakdown of what Trump's tariffs mean to house prices and to your mortgage. Much love to Lighthouse Financial for sponsoring this spicy episode. Please subscribe to the channel. Please give us a review. Please give us a like, and we'll catch you next time.
Cheers.